So we finished our journal entry to pay Bowden Company off for our accounts payable that we owe him. And we are now at number 19 of July. 19th of July. Here we sold merchandise that cost $800 to Art Company for $1,200. So the cost is $800. We sold it for $1,200. Under credit terms, $215 net $60. Free on board shipping point. Invoice dated July 19. Okay, let's start by setting up a accounts payable for Art Company. Oops, that's not right. We sold it to them. So we need to set up an accounts receivable. My bad. Art Company. So yeah, you have to be very careful which direction you're looking when doing this. And the sale was for $1,200, so I will debit accounts receivable Art Company for $1,200. I will go ahead and record the sale. Accounts receivable Art Company, $1,200, and sale credit $1,200. And then the two-step process, I also have to record the cost of goods sold as it has been moved from inventory to cost of goods sold, and that'd be for $800. And credit inventory. Okay. On the 21st, we issued a $200 credit memo to Art Company for an allowance on goods sold on July 19. So did they return anything with this particular transaction? Does it say anywhere that it was returned? No. Nothing got returned. So we're simply giving them an allowance. They're saying, you know, we're sorry that the order wasn't exactly what you expected it to be, so we're going to give you a little money back. Okay, so it could be the wrong color, could have had a dent on it, something might have been not 100% perfect, not a biggie. So we will credit their accounts receivable for that $200. They don't owe that anymore. Now they only owe $1,000 net. Okay, because we just gave them a credit memo for $200. And so I will then hit a debit to what's called sales, returns, and allowances. And then a credit will wind up going to accounts receivable for Art Company. For the $200. Okay. On the 24th of July, we paid Light Company the balance due after deducting the discount. And Light Company was right here. We have an accounts payable outstanding of $2,000 netted out, okay, because of $2,200 minus the $200. Okay, so let's go back here and look at this again. When did we wind up acquiring this from Light Company? This is right here. Excuse me. We purchased it on the 9th, credit terms $215, and on the 24th we pay it, so we just made it within that discount period. And we're supposed to receive how much discount? 2%. Okay. So 2% on 2,000 is going to be $40. Excuse me. So I get rid of the accounts payable by doing a debit. For 2,000 debit. Okay. I got $40 that I recorded, which is 2% of the 2,000. Okay. And that's going to wind up going to inventory credit, because now the inventory is worth less because of that discount. Okay, and then the difference is going to be paid out in cash, which will be $1,960. Okay. And that should take care of everything for the 24th. On the 30th, we received the balance due from Art Company for the invoice dated July 19th. And so on the 19th we had a 2% within 15 days, so he made it within the 15-day period. And we'll receive 2%. So let's take a look at Art. Art had an outstanding balance of $1,000 with these two netted out against each other. So an outstanding balance of $1,000. I will then wind up taking care of Art's accounts receivable. I will receive cash. It won't be $1,000. It'll be that less whatever discount that was recorded. So sales discount is going to be a debit, because the two combined will equal the total accounts receivable that we have on Art Company. Okay, so Art had $1,000, and that will be the credit side. And again, 2% of $1,000 is going to be $20. That's going to be my sales discount. And then that means I will wind up receiving cash in the form of $980. When you're doing these transactions, folks, make sure that your debits and your credits equal each other, and by using that rule you can literally back into some of these numbers. I wasn't sure exactly how much cash I was going to get back, but I knew I had a sales discount of 2% of $1,000, and so calculating that would be $20. And then I knew I had to have another dollar amount here for cash, and so I took the 1,000 minus the 20 to arrive at cash for $980. Okay, last but not least, on the 31st of July, we sold merchandise that cost $4,800 to Creek Company for $7,000 under credit terms 210 net 60 free on board shipping point. Invoice dated July 31st. This is the last transaction, so let's pull this down here. Creek Company, they had paid off their bill last time, so now they have purchased $7,000 worth of inventory. So I'm going to put that in their subsidiary account, and I will debit accounts receivable Creek Company for that $7,000. and the credit goes to sales. And of course this is a two-step process, so I have to record the transfer of inventory to cost of goods sold. $4,800, and it came out of inventory. For $4,800. So that's that. Here's my subsidiary ledgers. Let's see, I'll go ahead and put 1,000 over here because Creek got paid off, or they paid us. Okay, that was done. Bowden had 6,000. I believe they paid us off, so they did pay us, I think. No? I'm pretty sure they did. No, I guess not. Oh yeah, they did. Right there, 6,000. Alright, I forgot to update my subsidiary ledgers. Shame on me, I'm not a very good bookkeeper. Light Company, they had 2,200 minus 200, and I think they paid us off too, because here it is right there. Light Company paid us off $2,000. So they don't owe us, or we don't owe them, and we don't owe them. Creek Company now has an outstanding balance on their account for $7,000. Art Company has paid us, and so they don't owe us anymore. So the only thing that we really have outstanding is one accounts receivable account for Creek Company for $7,000, and we don't owe anybody here at this point. Okay, and that's that. Thank you very much for your time.